The last couple of weeks have been a turbulent time. You've seen a precipitous drop in Bitcoin, and you've also seen earlier this week a pretty spectacular explosion in a stablecoin, or what's called a stablecoin, UST, that attempts to mimic the movement of the US dollar, but in this case failed to do so pretty spectacularly. And that's another thing that creates some concern amongst regulators and amongst investors. I would say that at this time, the market for such stablecoins, and really crypto more generally, is too small to pose a systemic risk to the traditional financial system. If we were having this conversation 2 or 3 years from now in the future, and crypto or stablecoins made up a much greater portion of economic activity in the world, a precipitous drop or the implosion of a stablecoin like Terra UST could pose a systemic risk. Now, the reality is right now, these instruments make up really a fraction of the economy. And those of us in the industry are very excited about the potential for these instruments. But many people, retail investors and institutional investors, are still sitting on the sidelines and haven't taken a real interest in them. But as that begins to change and a greater portion of the economy goes into these types of instruments, a precipitous drop in the value of one could have a contagion effect and harm many different institutions and people that had invested in them. Luckily, we have not seen that over the last couple of days, although there are definitely trading firms that are losing a lot of money and that have money at stake in the outcome of this particular event. But no, I don't believe at this time it will pose a systemic risk to the broader system. When you look at something like Bitcoin, which has been around for less than 15 years, it becomes even more difficult to predict what will actually happen to this instrument in a week's time, in a month's time, in a year's time. So what I would say is that crypto is here to stay. We think there's a bright future for it in various different instances, but it's not a panacea for everything. And in terms of picking an investment strategy, we would suggest that retailers are careful and they educate themselves about what they're looking at, because these instruments do not operate like traditional stocks and bonds. And it will still be a long time before we really come to understand the fundamentals of what moves these markets.